Live. Good morning to everybody here. Thank you very much for everybody who joins us today. It is Behind the Markets, the Tuesday edition where we do finance and what we call Treasury Tuesday. Good morning, Vernon, and how are you doing, my brother?
Well, Dick, we are happy to be here. I think it's a good day to be black. How are you?
Good day to be. Every day is a good day to be black, Vernon. Every day is a good day to be black. Uh,
It's
it
the
is
thing.
strong. It's good. Now let's get down to the markets and let's get into some business. Today we're going to be talking about financial advisors, something I am, and people always ask me about them. So I'm going to give you some current advice on them
Mhm.
and also how to navigate around having an advisor. Some of the important parts of having an advisor. Because people like to say, "Oh no, they cost money." Yep, that's truth. They do. We do cost money, but there's a reason. But anyway, let's get into today's talk. Today's the market roundup. In today's market roundup, we are touching on we see the FX market has crossed over 18 on the interbank rate. People, I use the interbank rate, not the regular rate, because I always get those. No, but it was already 18. Yes, on the retail rate. I use the interbank rate because that's the wholesale rate that determines the retail rate. Okay, so we use the floor rate here, and that is 18.08. So that even the big corporates, the big giants, the oil imported, all those, they're now paying 18 kwacha per dollar. So it's up 0.5% and up 1.43% on the week, down to 11.46% on the month, but still down 0.09%. So we're about to get back to break even as to where we were at the beginning of the year. We are seeing that the dollar is now in a buying pattern. Stock market was up 0.68% to new all-time highs of 8,150. 7 days is up 1.67%, but up 11.08%, while the bond index is up 0.13% yesterday, down 0.46% in dollars, and the interest rates are still stuck around 24.0180. So you can see 24% has become the baseline for the composite yield. We did see also the Rand pushed up a bit yesterday by 0.8%. Good news came in for South Africa that the FX rate, the FX reserves were up higher than expected. That's bad news for Zambia because overseas cross-border importers or cross-border traders are scheduled then to have a little bit of trouble with higher costs of things, and that may bring imported inflation. So all those people who get on a bus, go to South Africa, buy things and bring them back, they're bringing them back a little bit more expensive because the Rand is up 1.64% on the period. So remember all of that. So if you're dealing with cross-border trader suppliers, expect them to come back with higher costing products for you due to the exchange rate. We also are seeing that the GRZ bond index up 0.13%, but up 9.8% year to date. In terms of the USD1, it's also up 9.83%. So you can see a balance now between the GRZ bond index and dollars and kwacha because the dollar is almost zero from where it was year to date. Well, interest rates are up 0.37% and did slightly move up yesterday due to obviously that's a slight sell off. But obviously, we're waiting for the next auction. Remember, the next auction is coming up in the middle part of this month. So prep yourself, people. The commodities board has shown that yesterday we did see copper prices drop 0.08%, while oil moved up 2.1% on as recession fears started to wane off. Copper is getting a new challenger in the industry, and we'll talk about that a little bit later. But gold was up 0.23%, so therefore up 11.13% in dollars. And what we're seeing now in terms of risk, in terms of what we call wealth insurance assets, Bitcoin back below 500,000. It dropped a whopping 6.3%. You see why I keep telling you people? When I tell you people about cryptocurrency, I know that it's running very well in the year, but what I keep telling you people is you got to have it in moderation because it's a wildly volatile asset. Okay, maybe up 65.44% year to date, but look at it. Okay, it's rung down 13.49% just in the last month, and you just saw it swing about 6.3. So it's very volatile. So keep it in moderation in your portfolio. It's a good hedge, what we call a disaster hedge, but keep it in moderation. Okay. The problem with a lot of people is we just see which one has given us the most return and we pile our money into it. And then when we lose our money, say, but you told us. No, I told you to spread your money around. Okay, that's like me telling you, Vernon, it's going to be hot the next week. Then you go to, in fact, does this make sense? I tell you, Vernon, it's going to be hot the next week. You go and take all your winter clothes and just sell them and go and buy summer clothes. And then it rains. And but you told me. You see, this is okay. Does that sound logical for you to go and do? No. So what you want to do is make sure you spread these things around by the highest probabilities and the stability. You also saw Ethereum down 7.3% yesterday, while gold is up 0.74% in dollars yesterday. So you are seeing that gold is up 11.03% in dollars year to date. So that's actually good for the gold market. Now, this is how assets were performing as of yesterday, 8th of May, 2023. We did see that the red bar, which we've put there, is what we call the real rate of return when we subtract inflation year to date, which is 6.1%. We have seen that about bonds are up 9.3%, 9.8%, but up 3.7% above inflation. Stocks are up 5% above inflation. USDs are down 6.2% below inflation, 4.9% for gold above inflation. And we are also taking a look at the fact that crypto is up 59. Bitcoin is up 59.3% above inflation and 47 above inflation Ethereum. Now, the reason why you have to always invest above inflation is because your money is only as valuable as what it can acquire and the time it can save. So I want to quickly have a conversation about this above inflation thing so that we all kind of get this right. Why should money be above inflation? So let's actually look at the value of money, Vernon. The first thing I think people need to understand is that money is used as a medium of exchange and a store of value, but a store of value for you to be able to purchase things. The purpose of money is for you to be able to transact efficiently and to have the ability to buy whatever you want without having to have what's called the coincidence of needs. Now, here's what you need to recognize about money. It is earned through work. Okay, I know people like to say this, but you may not want to understand this. Money is earned through your work. So you measure your money against your time. So the question about having passive income assets is not about how much money they can make per se, but how much of your time can they save. Okay, that's what you need to ask yourself. Because every time an asset makes money, it spares you from having to report to a workplace to go and make money to meet that need. An asset is now meeting that need, so that hour is free. So what you do is you take your monthly income divided by the number of hours which the average person works, which is somewhere around 40 to 50 hours, depending on the labor force survey. But let's use about 40 hours as the legal amount. If you take your monthly earnings divided by that, then you are looking at your assets and seeing how much they're earning. Now, I also want you to take a look when you go to a shop. So here's the reality, Vernon. The average Zambian is paid about 35 kwacha per hour. Okay, that's the average Zambian. So if a bag of mili meal is 200 kwacha, that means the average Zambian must work 7 hours to afford a bag of mili meal. But if a bag of mili meal was 150 kwacha or 140 kwacha, the average Zambian, in fact, not even 7 hours, that's below. My bad, people. My bad. But yeah, if the average Zambian, was working, was 7 hours. If the average Zambian was working, was not of a bag of mili meal, was 150 kwacha, the average Zambian would therefore need to work 4 hours. Okay, so do you see what inflation does? It devalues your hours or makes you have to work more hours for you to be able to afford that thing. So when you walk into the shops today, I want you all to think about this, and I want someone to write this down in the comments. Write the prices of things in hours you work. Okay, so the first thing I want you to do is step one: take your monthly earnings. Okay, how much do you earn per month on average? Divide it by, let's say, about 160. Okay, just for the purpose of this, let's say about 160, at most, let's say 170. Divided by 170. Okay, take your monthly earnings divided by 170. That's your estimated hourly earnings. Okay, now go and look at the price of things, and I want you to go through the shops, because you know what it does, Vernon, even when you're spending. When you start looking at things in hours worked, because work is a painful thing, okay? So now you're offsetting this desire to buy this thing with the image of how much work, how much you have to tolerate, all these things, how much work you need to do, how much labor you have to do to get that thing. So you're kind of looking at that, and I want you to pay attention to that. So if you people do that, that's why managing things according to inflation is important. So also managing your assets is good for inflation, because if they grow with inflation, then you know how much things they can acquire you, meaning that's how much they can free your time. Because the purpose of money, Vernon, you're earning a salary so that you don't have to worry about food, okay? But if the price of food goes up, then you have to earn more of a salary. That's why also you want to measure the word in food. It's not just that prices go up. That's a bad thing. It's our salaries moving up faster than prices. Like last year, salaries and prices moved the same. The year before, prices moved twice the speed of salaries. And the same was true the year before that. So it's about what is the percentage change in prices, what is the percentage change in salaries. Okay, that's what you want to start looking at, because if prices move up 10% or 20%, but salaries move up 30-40%, then you've gained, you've improved your life. Okay, you're able to afford more, you're able to say you've got a more affordable life, you can afford more. So you must always measure your livelihood by affordability. Okay, what can you afford in this life? So if you are earning more, that's why always look to invest in improving your earnings or your earnings capacity. Okay, that's why businesses may cite inflation a lot, but big businesses in the stock market don't really cry about inflation a lot, because they grow their income and their revenue faster than inflation. So you'll see that if inflation is 20%, is 10%, then you'll see businesses will say our revenue is up 49% this year. Our revenue is up 30% this year, 40%. Why? Because they're outpacing inflation. Okay, that's how they're operating, and their profits are growing at a faster pace than inflation. That's the way they wire their brains, to always beat inflation. We wire our brains to cry about inflation. So that's why you have to work on improving your hourly earnings capacity. Okay, that is the trick, the number you need to pay attention to. You cannot, you know why I say this, Vernon? You have
Hmm.
control. To an extent, you have control over how much money you can make. You do. You can choose which work you do.
Mhm.
You can get better at it. You can train yourself. You have zero control over the price of things. Zero, zip, zilch. Okay? You don't have control over the price of things. So sitting in front of a screen, punching away in a comment section about inflation all the time, okay, does not do anything for you. It can't. And this is a reality check that everyone needs to start having. You cannot, as in, you have no power over the cost of things, but you have power over how
Mhm.
much you earn. So if you focus the majority of your attention on your earnings capabilities, then inflation becomes less of a stress on you. Pray about inflation. Okay, go for it. All right, that is what you call, if you want to be a highly effective person, rule number one of being a highly effective person, this is habits of highly effective people. Habit number one is to be proactive. How do you practice being proactive? By looking at things that are worrying you and deciding, is this a concern or is this something I can control? If it's something I'm concerned about, then you put it on your prayer list. If it's something you can control, you put it on your to-do list. You pray about your prayer list at the beginning of the day, you pray about it before you go to sleep, and for the filler of the day, you work on your to-do list. Okay. So if the price of things are
Yeah.
going up 10%, look at yourself and say, now, how do I improve my earnings capacity by 20%? Okay. How do I double? How do I outpace? If we can all start thinking that way, okay, then inflation becomes manageable. Now, we're not saying we just run away with inflation, no. But if we start thinking in money earning capacity as opposed to money spending, the reason why we cry about inflation more than anything, Vernon, is because we are spenders more than we are earners. In our brains, we are wired to
Mhm.
spend money, not to earn it. When somebody says, I want to be a millionaire, do you know what they're actually saying, Vernon? They're not saying, I want to
Mhm.
earn $1 million. They're saying, I want to have $1 million to spend. That's what we judge a millionaire by the way. Even
Yeah.
in the book, The Capitalist N Word, he actually cites that. He says the problem with Africans is that our perspective of wealth is based on how much we can show it to other people. You're not wealthy unless you're Ankondarama. That's the mentality. You can't be,
Yes.
if you're quiet and you're rich, you're not rich. That's the way we operate. Okay. And that's the reason why poverty is our friend, because we operate with wealth on sight, not the actual wealth in this country, where, because nobody can see your bonds, Brennan. Nobody can see your stocks. Nobody can see your asset portfolio. But that's where wealth is. Okay. But we judge wealth by lifestyle. So when people say, I want to be a millionaire, and you ask them, describe what that means to me. And they'll tell you, oh, I want to be able to travel here. I want to be able to spend. So all they're describing to you when they talk about being a millionaire is they're talking about spending money. Okay. But they're not talking about, I want to be a millionaire. Oh, I actually want to be able to have a business that generates X amount. You don't hear people say it. I want to own this many in bonds that has, I want to have an asset portfolio. They're not talking about the assets. They're talking about the act of spending. So already there's a warped perspective. And that's why inflation becomes such a nag for people, because all they can think about is how to spend money. They cannot think about how to make money. And that's why that's the shift. That's the when you talk about your mindset, that's the shift we're talking about. Okay? I don't know if you got any thoughts on that before we get on to the next convo.
No, I think that's just but entirely it. The spending is it has come to a high level of where now we see it no more to be spending, and then as always, people of course who are not as wealthy, as of course, so I would say in the average, earning class, we need to be concerned more about saving, trying to, squeeze ourselves in places where we're not. In this notion of whenever you get money, you try to spend a whole lot of it. It's not working out for us, and this is why, well, when you talk about wealth, it's still in that line. All that happens as usual, saying people money is evil. No, what money does is basically amplify your attitude towards money, or your money management behavior. So when you get more money, all you continue doing is your regular habit, but exacerbated or at a different or a higher level when you have more money. So I think it really trickles down to the narrative of still working around yourself as you handle things. And primarily, I think the spending habit just but has to be worked on. I don't know how, what, and what would be comfortable for other people, but the spending habit has to be tamed. Otherwise, we would be a much better country if we actually knew how to handle money.
The other thing, Vernon, is before we tame the spending habit, earn. Like, you've got to be aggressive about earning, like allocating your time and efforts to earning. Like, we all, our joys are coming from spending. Like, I always tell people, if you're happier spending money than earning money, saving is going to be a very difficult thing because you'll gravitate to what you're
Mhm.
happier to. But if you're happy
Yes.
earning money, okay, and I'm talking about the way you earn it, not receiving it. I'm talking about the effort you give to earn it. Okay, if that's what gives you a lot more joy, then you are actually more likely to out earn your spending, and therefore have a margin
Yeah.
that you can allocate to assets. So this is why you need to get to a point where you've got this depth connection, like you get a lot of satisfaction and meaning from what you do. The reason is that if you do that, you can out earn your spending. So that there's an internal emotional equation that people don't want to crank because they don't want to do the internal work. You see, everybody wants the outside to be fixed, but they never want to address the icky part inside. Okay, and that is why you want it's give us in way you want, so that we can spend only, but you're not thinking about, okay, how do I improve myself to improve my earnings and make sure that I've got more energy in the way I earn money. And if your joy and energy comes from that, you're actually more likely to battle inflation better. And that just came about because we were talking about the world real versus nominal. Now, to get back to the markets, Vernon, some of the data that we've also picked up from yesterday, we did see that that oil was up 2% due to following strong U.S. jobs numbers. U.S. expected inflation expectations declined to 4.4%. Consumer inflation expectations are declining, while South African FX reserves rise, unexpectedly strengthening the rand. That's an inflation risk to us. EU investor confidence has declined again. That's obviously going to be a problem in reorganizing our debt. And the US short-term interest rates are also still elevated above 5%. That's also a problem for us reorganizing our debt and getting lower interest rates. Tailwinds that we're also picking up in terms of the international market. US employment trends are still showing strong signs, while the retail sales in the UK up 5.2%, while wages in Japan rose 0.8% month on month. However, Japanese spending went down by 0.8% and 1.6% year on year, showing some weakness in the Japanese consumer still. German industrial production was up. Sorry, I forgot to finish that sentence. Chinese export still was up. Dropped from 14% to 8%, but still in the positive, while Chinese net trade is up. That's good for copper. But German industrial production, fell 3.4%. That was a bit of a mistake that we had there at the top. That's our four horsemen outlook. And the main stories that we saw yesterday was Puma Energy became the 10th stock on the stock market to pass the 1 billion kwacha mark in terms of company valuation. We have now 10 stocks with a value of 1 billion kwacha. ZCCM chair did resign and also got suspended from the LSE. We're going to go through that in depth tomorrow. African Bank Vice President Kanayo Awani was honored at the African Economy Builders Forum for her unwavering commitment to realizing the aspirations of Africa's Union's Agenda 2063. We're also seeing that Argentina's investor-friendly approach is making it a target to become one of the top 10 copper producers by 2030, with estimated 800,000 metric tons of output by 2030. Gold was muted due to strong job numbers, and we also saw oil was oversold. That's why we're seeing that the prices are starting to come up. President Biden is scheduled to meet with his Republican and Democrat teams in Congress to sit down and try and resolve the 3-month standoff on the $31.4 trillion debt ceiling to avoid a crippling default by the end of May. U.S. households have also been seen to have been saving in excess of $500 billion, according to the San Francisco Fed, and the United Arab Emirates has been applauded by executives such as Coinbase for coming up with crypto rules because they're trying to make themselves the crypto center. So is Russia trying to do that. So those are trying to run from crypto. But the main story is, number one, Puma Energy becomes the 10th stock to become a billion kwacha company. Now, there are other billion kwacha stocks out there on the market. Other stocks include Airtel, Standard Chartered, CEC, which is the biggest stock on the market, ZCCM. We also have Zanaco, and we also have Zafico, which was the latest one to join. It's now 1.01 billion. So it was actually one of the ones that also joined, and there's another list of them. So there are actually 10 stocks in the stock market out of the 23 listed companies that have got valuations above 1 billion kwacha. I call them billion kwacha club. Now, Puma Energy has been one of the best stocks performing. The stock is up 51% year to date. The stock has almost doubled. The stock has really been moving 51% year to date, up 35% just on the month. Okay, so we've actually seen this company move up by 35% on the month. And this was also yesterday we did see a 24.62% jump in the stock, which closed at about 2.43 with a valuation of 1.21 billion. The company has benefited obviously from higher oil prices, monthly reviews, which have allowed them to now get more in line. So you actually see that the monthly review is more beneficial to the oil marketing companies because therefore they're no longer holding oil loss-making stock and therefore having to sell it at a loss. It's getting revised to market prices every single time. Strong prospects also in the LPG. Remember that they just acquired OGAS for about $3 million recently. So they're going to go into LPG by buying the third biggest one. Now, the stock has a price to earnings ratio of about 5.25 with a price to book value ratio of 0.92, meaning that it's trading fair value. These are signals that it could be trading at fair value and below fair value because the benchmark for the price to earnings ratio is 7%. While the book value ratio is anywhere from 1 to 3, meaning that this stock is underpriced still. So it has some room to run statistically. Now, does that mean it's going to generally run? No. You must sit down with a broker, sit down with an advisor to guide you through this decision. But it does not mean automatically that I've just said this, it's going to boom. I'm giving you some of the factors behind it so that you can make an informed decision as to how to purchase a stock. So you're seeing the outlook is strong and it's underpriced. This is the kind of stuff that Warren Buffett calls value investing. Argentina has set itself to be the number 10 copper producer. In an attempt to diversify its exports, Argentina has implemented investor-friendly stance, attracting the likes of Glencore and Lundin Mining to their mountainous north. They are projecting to produce 793,000 metric tons by the end of the decade, and San Juan is the home of 5 projects which have totaled 22 billion kwacha, dollars, kwacha, $1 billion. I've scared you people. $1 billion in terms of three more projects in Mendoza, Catamarca, and Salta, all in the northwest of Argentina, which is on the border with Chile. So you can actually see that is what they're expecting to do. Biggest story also in the news yesterday, we found that the U.S. households are holding $500 billion in excess savings. And this could support consumer spending in the end of the year to try and stimulate the economy. Now, this depends on whether, now the reason why they're holding too much savings is the interest rates that they're getting at banks right now, and also the amount of money they had at the pandemic. So it depends on whether households now prefer to keep more savings than before. The pandemic did scare people. So seeing that they had to start using emergency money people, and even with us, people started flooding their savings account. Vernon, people are flushed with savings in their cash accounts. They are huge amounts, even individuals. Like the average individual you start dealing with has got tons of money in cash. Okay, one, because they're scared of getting, even in Zambia, they're scared of getting swindled. And I think there was obviously that pandemic season where not much spending was happening, not as much spending was happening. So therefore, we have changed. You are seeing that consumers may have changed their patterns, but it may also be the pandemic aid that you also found happening there. So at the peak of the post-pandemic in America, they did find that there was $2.1 trillion of excess savings. So they've spent about $1.5 billion, unleashing that onto the economy. But what has happened, Vernon, is that people spending that $1.5 trillion is what has caused the U.S. inflation and caused the Federal Reserve to go into inflation fighting mode. So it's when people start to offload. So what you always get worried about is when people are hoarding cash and then they bang offload it onto the market. Now that's not a Zambian problem yet. It's not a Zambian problem yet. Totally, we're still battling with people just vacuuming their money. Now, just quickly, I want to give you our chart of the day. Vernon, our chart of the day is the NAPSA chart. So this is how it's been from the beginning, from the genesis. Okay, this is NAPSA pre-retirement cumulative payouts as from the beginning. Look at our people, Vernon. Look at our people just grabbing money. 2.8 billion has been unleashed so far. 2.8 billion. People, this is in 2 weeks. Look at the beginning. There was only 12 million released by the 23rd of April. In 2 weeks, people have wired 2.8 million in 2 weeks. We got to a point where I think the highest day was May 5th, where we saw about 450 million get unleashed in just one day. Yesterday it was 119. So we're at the point where our people are just wiring about 150 million on average every single day. Average person is withdrawing 30,000 kwacha in terms of their NAPSA withdrawal. Where that's going, all I can tell people is the more of this you spend without investing, don't be surprised when you see inflation at the end of the year and start saying, but what? Why are the cost of things up? I don't know. Because you decided to inject the money into the economy looking for less stuff. So this is the problem. You've got more stuff than you have things. Therefore, the price of things go up. Okay. Now, if you're looking at the number of people, this has gone from, sorry, Vernon, let me just go back here. If you're looking at the number of people, this has gone from 301 people, okay, on the 23rd, 301 to 89,415 people.
That's too much. That's too much.
The biggest day, I think, was the 4th, where we saw 13,000 people getting paid out. Now, the reason why this is moving so fast is because the banks are stepping in, because it's also a way for them to open bank accounts for their for their customers. So it's become a way for banks to step in and make a lot of money, to try and grow their business side of things, because the requirements are also to open a bank account. So NAPSA is pushing a lot of money out by people opening bank accounts, and the banks are stepping in. We actually saw some of the bigger banks stepping in to say, look, you can even come and do some of the applications. Once you open an account here, we'll do it all for you. Come on, just come on by. We're right here for you. We're right here for you. That's just the way it's happening. So the banks are and the banks are also trying to fend off the fact that the mobile companies were lurking around saying, we can receive. And then the banks quickly jumped into action. Hey, before you come and steal more of our business, we would like to step in. So there's a battle between banks and mobile money over who can use this to open more accounts. So that has been the biggest story of this situation. So Vernon, that is, before we get into our midpoint ad, today we're talking about financial advisors. So I want to quickly share with you a video about NFL players and NBA players from this GQ show called How I Spent My First Million. It'll just be a few minutes and we'll finish the other side of it on this side of break. But this is about 5 minutes, people, for us to watch. So Vernon and I can now just take a little bit of a nap here. But for you, this is a warning. And what I like about it is this is football players and basketball players who are now learning that if you don't have a financial advisor, when you get a lot of money in your hands, it's a problem. So you're seeing the new generation are more interested in handling their money better. And here you go. NFL players and NBA players talking about having financial advisors.
I dibble and dabble, but most majority I saved a little bit. You know, the rest of this million, dibble and dabble, but most majority I saved a little bit. You know, when you spend some, you gotta save some. For guys entering the league, when you make money, like, I know it's gonna be overwhelmed, like you feel like you get anything in the world, but just know it lasts long, and the more you spend, the more you just see it, you know, it goes down as fast. So I think the best thing is get you a financial advisor that you trust, budget very well, and you'll be just fine.
Tell you this, you might think that I done blew all my money. No. I had a financial advisor, and I was able to spend that because that's what I made, and I did it the right way. And that's why right now, I'm sitting back and I'm blessed, and I'm still doing good. But the rest of you have to be smart about it, right? You have to have a financial person who knows exactly what they're doing and knows when to spend the money, how to spend the money, and be budgeted so that, you know, you don't go broke. And a couple of guys that come in the locker room, I say, so if I went and bought a cheeseburger and you went and bought a cheeseburger, I said, you're spending the money that you made this past game. I'm spending the money that my money has made. Make sure you invest in your money and stock, mutual bonds, stuff like that, and setting it up, set your budget up so that your money grows, and over time, it just goes up and up.
I do have a financial advisor, and that costs about $10K. Just having all this money, you gotta make sure you don't spend too much, so you end up going broke. It's all right to splurge a little bit, but just make sure you have a financial advisor and you just save your money because you never know when it's going in.
Before I ever got drafted, I kind of set like my whole team up before, you know, everything. I had an advisor, a lawyer, accountant, agent. By the time I got drafted, I had, you know, all the people ready, and just kind of the money had to be put in the places that we were already discussing.
We signed a financial advisor before I got drafted, and getting, you know, millions of dollars is like a lot of pressure and a lot of work. Obviously a big blessing, but you're like, okay, what do I do with it now? You know, Terry, you know, knows our goals and he takes care of them and helps me invest, helps me make the right decision where to put my money. So, you know, having a financial advisor was huge for me and something that we really thought was very important.
If you need a buffer, I'm not gonna lie to you, that's what your financial advisor and your agent is for. You need people who can say no and be the bad guy. Sometimes if you're not willing to be the villain, get your financial advisor to say no. And that's on tickets, that's on hotel rooms, that's on flying people in and out, that's on whatever it is. Get yourself a no person, because you're gonna have plenty of yes people in your life.
Get a financial advisor first and foremost. Get someone who you can trust and save your money. This goes very quickly. When you're 17 years old, you're not thinking about the future. I'm not saying not to spend money, because you gotta live life at the same time and you gotta enjoy yourself, but just be smart about it. Just be smart about your money, be smart about the people who are close to you. And you know, if you have that, then there's gonna be more where this came from for sure.
Of my first million, I probably spent 165,000.
Did you hire a financial advisor?
I did, and I think that's very essential when it comes to saving and managing money. As you can see, I try and be pretty smart about how I save my money, so the rest of this is all in the savings. All this money here, it went to savings. If I could get any advice to a rookie coming into the NFL, having this amount of money for the first time in your life, be wise with your choices and decisions. I know you have things that you've always had maybe, and that's perfect. Like, go get it. You earned it. And also be smart, mindful, and prepared. It goes by quick.
I definitely had to get a financial advisor first, because I knew.
So I just want to quickly put that out there. So you can see the trend here. These guys have learned that, hey, because what they did to most of these NBA and NFL players is that in draft week, what they've started doing is bringing the players who went bankrupt back to speak to these guys about how they went bankrupt. So it's the guys now standing there saying, no, I ate the money. You know, that conversation has been going back and forth. And these guys are terrified because they're looking at these guys who they used to look up to. Some of these guys, the reason they're playing basketball and football, and they're seeing the state they're in, okay? And they're scared to realize that, oh my goodness, you mean this amount of money can actually vanish. So they've all rushed to go and get financial advisors straight from the beginning to try and make better decisions. If you are handling money you've never seen before at a go, you need counsel. Trust me on this. Trust me. Okay, so that's why on the other side, we're going to talk about getting financial advice, but you need counsel, you need guidance, because your emotions are going to get the better of you. But we'll be back on the other side to talk about the issues of financial advisors.
And welcome back. Thank you for still staying tuned to Money Today. Still looking at what is. Hi, good to have you back.
Yeah. Good. So here's a statement. I think what Dave Ramsey has about looking at who to follow. Because some people say, but I can't afford an advisor. Yes, you can, but you can afford to spend time on who you're following. You have bundles, people, and you're spending time following who. And these are the questions you need to ask yourself. Because if you can't spend money, spend time. Okay, that is the question you need to understand. When you need something, you can either spend money or you can spend time. And that's why I always say the 3 T's: time, treasure, talent. If you don't have enough treasure to acquire something, you do have time and ability. Okay, so use your time and abilities to learn something. That's what you can start to do. So take your time and ask yourself, well, now with my 24 hours in a day, or the hours that I'm awake, who am I following? Who am I listening to? What information am I consuming? Or am I just in jibber jabber conversations and saying, I got to put an advisor? But you've got all this time in the world to waste it on all sorts of things that are nonsensical to you, but you're complaining about money. I'm not saying you can't go and have fun with your time. Go ahead, by all means. But when life hands you some rough ends, don't say why is it unfair? It's unfair because you're using your time incompetently. I know that's a tough word to put out there. But now I'm going to put out what Dave Ramsey is saying about following advice, okay, and listening to people and following people and people giving you plans. This is what he talked about, and he gave a simple advice. Here it is.
Got an 8-pack and I got a keg. If I hire a personal trainer, he walks in, he's got an 8-pack and I got a keg. I got to decide if I'm going to do his plan or my plan. 10 freaking million people have gone through Financial Peace University. There are tens of thousands more millionaires all over America just because they did exactly what we said to do.
So if you don't have a financial advisor, what can you do? Well, find a plan of a person who can actually take you through one. Okay, so I've always given people 5 things to follow. People say, what should I invest in? I always tell you harvest, health, higher education, home ownership, huge purchases in that order. Okay, I've given you some advice on how much to do of all of these. Usually what I do is I sit down with people. Like my process, Verdun, is I'll sit down with someone and say, give me your numbers. Because once I've gotten your data, I feed it into the basic system that spits it out and tells you, right, so this is how much you should be saving on a monthly basis. Because I base it on your income. I always work on what I say, give me your side. And your side is your situation, inclination, destination, and your expectations. So give me your situation. How much do you make? How much do you have? What's your family situation? How many kids do you have? Are you married? Do you have a stable job? Are you an entrepreneur? What are you doing for a living? These are the questions I will ask. Then when I get that data, I then feed it in and say, right, now that I've gotten all that information, what kind of risks are you up for? So take a simple risk test. All I need is your Myers-Briggs personality test. Then I get your information in terms of maybe how you view. I make you take what's called the Ramsey Know Yourself, Know Your Personality test. It gives me what kind of person you are. Once you've completed that, then I ask you, okay, now where do you want to get to? I say harvest, health, higher education, home ownership. Where do we want to get to? Do we want to be financially secure, financially free? So do we want to be secure, self-determined, or self-reliant or self-determined? Do we want to have kids going to, in terms of higher education, do we want to have kids going to college, local university, regional university, global university? Because everybody always comes to me and says, well, I want to send my kids anywhere they want. And then I tell them, okay, do you have 2 million kwacha? Are you willing to save and invest 2 million kwacha for your child's education, for them to be able to go wherever they want them to go? Then reality dawns. And then they start to realize that, okay, maybe that's not affordable. But then I also tell them that, education is changing. This is a reality of life. No, and look, it's everyone. I think what most people need is what we call a reality check. Just so that your dreams and desires are met with reality. And you ask yourself, I don't tell people whether or not they should do something. I tell people this is how much it costs. That's all I tell them. I never tell people no. I tell them this is what it costs. Okay, in terms of time or money, this is what it's going to cost you. And then they have to make the decision whether they are willing to give up that amount of time or money. That actually helps them. So that's the process I follow. That's why I ask you for your expectations. People tell me, I want to retire in 4 years. Then I tell them, cool, it's going to cost you 15 to 20,000 kwacha a month in savings and investing. Are you willing to do that? Then they say, no, I'm not. And then I tell them, then you can't make 10 years. There's a cost to everything. So my job as an advisor is not to tell you whether you should or shouldn't do something, is to tell you what the cost of what you want to do is, then to give you a recommendation of what probably could work. Okay. And it's your choice. You have to make a choice, to make a decision as to what you're going to follow, because it's you who has to save, it's you who has to earn, it's you who has to invest, it's you who has to execute. Okay. I just give you the map. Okay. I'm just telling you the map to follow. You then decide if you want to follow it. So the question is, which one, what do you want to follow? Now, most of the time you're coming to me, it's because maybe you haven't gotten it right before. Some people have, and there are two kinds of people who come to me, Vernon. Somebody who has gotten it so right that they've built such scale that they're scared of losing it. Because the bigger your financials get, the more fragile you get. Okay, because you got more to lose now. You know, before you didn't have any assets to lose in bad decisions. Now you actually have built $1 million kwacha worth of assets. Now you can actually make a bad decision and whoop, you're gone. Okay, and people think $1 million kwacha is impossible to get to. Actually, truth be told, over the last 7 years, a person who's been investing 3,000 kwacha a month in GRZ bonds would probably have about $1 million kwacha in GRZ bonds face value by now. They probably actually would have had $1 million kwacha worth of GRZ bonds by now, from 2014 up to now, so the 7-year period. So it's not actually impossible. You just have to up your earnings capacity and then now allocate very well and be consistent. So a person who's been investing 3,000 kwacha in bonds on a monthly basis, reinvesting any of their maturities and investing their coupons would probably have, and investing all their coupons, doing aggressive investment, would probably have a net value of their assets somewhere around 1.1. Somewhere around there, 1 to 1.1 million. Somebody's been doing 5,000, probably sitting around about 1.4 to 1.5 by now over the last 7 years. Now, that's not a guarantee of investing. I'm just giving you the track record of what would have happened over the last 7 years, just to give you a mindset of it. So the reason I'm saying this, Vernon, more than anything, is simply because that is what sitting down with an advisor does. It's like saying to you, Vernon, I want to get from the Money FM office to, I don't know, let's pick a place randomly, Mulungushi Conference Center. Okay. Now, what a financial advisor is you switching on Google Map. That's what it is. You have to first, Google Map requires you to give them your current location and then to give them your desired destination. And then Google Map then charts out the best route for you to get there. The advisor is there to help you take the path. My job is to lighten up your path, to help you see which steps to go. That is the point. Okay, to help order your steps for the destination you want, but you have to determine the destination that you want. Now, why is it good to get quality advice? Let me give you a quick story between Charles Barkley. I think we all know the basketball player Charles Barkley and Michael Jordan, when they both got Nike deals, and the advice Michael Jordan gave Charles Barkley. Listen to this.
And they signed me. And Michael gave me some great advice. We both go to Nike. They signed Michael and they signed me. And Michael gave me some great advice one time. He says, hey man, why you need all that money? I said, dude, what you talking about? He says, I was looking at your contract. You're making about $3 million. Tell Nike you want $1 million and you want the rest in stock options. And I said, thank you, Michael. Okay, I'll run it by my guys. He says, that's a good idea if they're gonna be great. I says, this dude's the greatest basketball player I've ever seen. Let's do it. Or just do it. I actually made probably 10 times the amount of money, and I'm still with Nike to this day.
So you see how somebody spoke to Charles Barkley and said, Charles, you're getting $3 million from Nike. Why are you sitting on that much cash? You're just going to spend it. So why don't you ask them to give you the $1 million in cash and the $2 million in Nike stock? The value of Nike stock goes up. Nike becomes a profitable company. And then Charles Barkley has come to realize, hey, hold on a second. I've got an asset that's actually making a lot of money now. Instead of me holding this cash, I was going to finish it once off. So you see what the importance of quality advice is. Michael Jordan was a guy who surrounds himself with very smart people to help him get there. He didn't become that smart of just nothing. Michael Jordan surrounds himself with people to help him make decisions like that. Magic Johnson does the same thing. They surround themselves with people to get wise decisions like that. The Bible even says, in the multitude of wise counsel, there is success. Okay, wise counsel, not just any counsel, wise counsel. Okay, so you have to be selective about who's in your counsel. Okay, and then it also talks about the fact that if it says that he who what is the word? Blessed is the one who does not walk with the wicked, but walks with the wise, for he is like a tree on the riverbanks, and he shall bear fruit in all seasons. Actually, it has been shown by Fidelity that people who work with an advisor often weather the storms of markets better than people who don't, because the advisors help them with data navigate through the markets when they need to switch, when they maybe don't need to, what asset compositions they should have, and what to expect. They also help them not to react, because people say, oh, I need to sell everything. No, let's diversify well so that something pops while something else may be coming down. We'll have a balanced outcome. Your advisor is your level head. They give you that. So if you can't afford an advisor, sit down and follow and ask, who are you following? What information are you following? What are you gathering? What inspirational investment information are you getting? What intellectual are you reading books to try and help sharpen your investment acumen? Are you taking courses to try and help you with starting up investing? What are you doing to get yourself better in this? Because that's what you need to try and work on as an individual when it comes to getting an advisor. So my advice to everybody here and from here is follow. If you can't follow, okay? Follow a professional, an accredited, or somebody who's giving you some goods, who's got some good baselines here. Follow somebody who can give you the good investment decisions, okay? That is the way that you can do it going forward. Because if you don't, what ends up happening to you is that you go through a lot of bumps and bruises when somebody could have guided you. Because at the beginning, Vernon, what you need is to follow instructions. So I always tell people, what you do in your beginning is you follow instructions, then you follow procedures, then you follow principles. Okay, so that's what you need to do. Follow instructions, then you follow procedures, then you follow principles. Too many people want to start following principles, the way things are going before. No, follow instructions. I tell people from the beginning, take this amount and invest this in bond. If you want to get this plan for the first 6 months, do this. Just do it until you get good at it. Okay. Then the next 6 months, do this. Because when you follow instructions long enough, Vernon, you become very good with those instructions. And then you're able to start experimenting a little bit more and a little bit more and a little bit more. And before that, you become an intelligent investor. But you don't become an intelligent investor overnight. You become an intelligent investor under instruction. Even Warren Buffett was under the instruction of Benjamin Graham at the beginning of his career. People, there is a period of instruction. If you've watched The Karate Kid, okay, Daniel-san, for those of you who are my age who watched it, he was under the instruction of Mr. Miyagi. Even when you're trying to learn karate or kung fu, you don't just become a kung fu master and start fighting people. There is a sensei who has to give you instructions for a period. Find your sensei first. Then you go through training with that sensei to then become a kung fu fighter. So it's the same thing with investing. There is always a period of instruction. Then there's a period of following procedures, which are a bit more vague instructions with a bit more latitude. Then you can follow principles. You can follow, you then follow patterns, then you'll follow principles that you understand, because then you can go into unknown circumstances. You can look for new assets. You can start to make decisions on your own when you understand principles, but you can never understand principles without going through an instructional period. That is what your advisor helps you with. And I will leave that there, Vernon. I will leave that there. Cheers, have a good day.